Welcome to stockmarketpending.com, home to the professional trader, home to the investor, and everyone alike. You can always visit us right here. What we're going to talk about is we're going to talk about Amazon with the weekly chart with SMF Pro Trading students. And what we're going to really talk about is, at times, why did we make a fortune? And at times, why did we make a fortune when it went down? And what was the SMF way versus people's way? SMF way works. So basically, we're going to work with the Amazon chart. It was one of the first ones that we had bought. We were short Amazon over here. And once again, I'm going to work with the weekly chart. We shorted up here one time. It came down. I got the live trades recorded. Talk is cheap. Go find them on the stock trading videos on stockmarketpending.com, and you can see everything I'm talking about here and showing on that chart. Now, we peaked. We shorted here, and when it got support, we went long, and on that up week we covered, and we let the long side go, and we made money in both directions. We got here on a weekly distribution bar, and once again, on a weekly trend now, is that I'm going to draw the trend line right there. There's half of that bar. We put the top reversal in. Notice that the 10-week started to do what? Descend. Versus when you were breaking out on the weekly, you were ascending, and the 10-week, once again, was climbing the stairway to heaven. And that, my friends, is where the true momentum was. Now, as we look deep inside of the trend, we went short here, and what provided that short was the reversal descending 10-week moving average going down. We closed 1, 2, 3, 4 weeks right here below the 10-week. That made it a bear reversal trend. Bottom line. And not only that, we were totally overbought on the weekly MACD bars, and we started to come down the hill, and as we were going down the hill here, guess what? Amazon went down, and it provided you a great 4-week trade. We got down at the bottom and we consolidated. Notice, unlike the Google chart that you were just showing, is you had a big weekly breakout. You have, technically, you got 1, 2, 3, 4 weeks above the 10-week moving average. Because you do. And not only that, the 10-week moving average, which is the blue line here, is it's no longer what? It's not going down. It's not descending. And as it comes up, it's sitting on top of the red line. What is that? That's the 20-week moving average. The bullish thing about the chart is that it's consolidating that weekly bar 4 weeks ago. The consolidation, the 3-week consolidation, is at the high of that weekly bar, people. That means that every dip is to be bought. Not only that, the underlying support here is always the 10-week. But it's gone from a long-term bull trend, which it did. We bought it over here, 4 weeks above it, way back in 2008, early 2009. Amazon, just like Goldman Sachs, led these markets higher. They're great leadership, and they've done well on the earnings. Okay? So basically, you had a long-term bull trend. You got too overbought. You corrected right here. The 10-week percent DS is above the percent DA right there. That means that we have worked the overbought level off, and we went into a short-term bear trend 4 weeks above it, and now it's back in a bull cycle because the 10-week is pointing up, and you got 4 weeks closing price above the 10-week. That's what Google is not currently at versus the Amazon chart. So you know. And that means that as long as I consolidate the high of this weekly bar right here, people, and that means that that 20-week moving average is the key support level here. But here's the most important thing is consolidating the weekly breakout and not closing below that bar. Yes, ultimately, half of your weekly Pro Trader bar right there is the underlying support, because it is. And the 10-week, if the 10-week, during this weekly consolidation here, that 10-week starts to roll up even more, eventually it would cross above that red line. Oh my gosh, no telling how high we would go. I can tell you, though, that the previous tops over here will be broke at 140, whatever it was, 145. And the last print on Amazon right here is 135. And Ray bought some call contracts right here at $3.50. And he was in the contracts at 440. And basically, Mario said on Friday that I'm going to buy them cheaper. And I did. About 90 cents, almost $1 cheaper. The high was 5 1/4. Our entry is 350, people. And let me tell you something. When it comes to position management trading, it's taking a look at where the immune system is on Amazon. And basically, we've got a bull trend working, and therefore the bottom support levels need to be bought and traded daily. Every single day, this stock should be traded using our other skills that you are being taught to get the entry on the intraday level. And then, because of the bull trend cycle that is here, is that you would be buying 500 shares, adding 500 shares. I will have traders at the bottom, 5 to 10,000 shares, senior pro traders. So basically, what I want people to know is that the things that are working in your favor is that the CCI was 49, the next week it was 50, and this last week it's 69. And so that means that the vitals are going in the right direction. And that means that the drop down support level needs to be heavily bought and traded as long as this continues. The other thing that you want to be mindful of is that the MACD bar is gaining value here. It's higher than that previous week. And as long as that grows, that's even more bullish for the drop down to support entry levels. And as long as that 10-week, that percent DS on the weekly is gradually keep going higher, that means that that trend is getting stronger and stronger and stronger. And that's why the 135 call, and even if there was a shakeout, this here call, 130 option call at wholesale price, need to be bought. Big trade here. And if you got the 130, so you got the 130 behind the 135 call option. Why? It's because in the money call, because it's closed at 135, the equity did, but the drop down is going to move the 130 very fast because it's in the money call. Whereas the 135 call, as you can see here on the film, is we're right at the 135 strike. So any drop down, I'm a buyer of the 130 because I'm going to move, and even if I come down in price here a little bit, it doesn't matter. It's going to move very quickly and make up the difference. So I'm a buyer of that 130 on Monday, and I'm aggressive buyer on any morning at the futures gap down or whatever. I'm a buyer, and you've been given a gift about the SMF Pro Trader qualifier from bull to bear back to bull.